All right, we're going to look at the stock market. We're going to look at the SPY 1 to 3 month view and take a special look at HYG because HYG and the stock market tend to follow each other. Looking at the HYG chart, it is suggestive of a lot of weakness coming out there ahead, and I want to show you that. Let's take a look here as we switch over to the SPY. And I'm going to give you a little lesson in here, a fantastic lesson actually, as to what we're looking at in here. I want you to see that we're looking at cycle analysis, and I'm doing a little more advanced cycle analysis right in here. Each of these are the minor cycles that you see right in here, right like that. And when you get, and you can see down here the minor cycle, that's how they line up. It's just spectacular. When the dominant cycle right in here, and this is called a cycle bracket, this is the ideal lengths, and the real lengths come out approximately. Cycle lengths are measured from low to low, and it doesn't have to be perfect. And you can see 1, 2, 3, 4, actually, there were 9 that continued to make higher highs and higher lows, and that, of course, is the uptrend. I'm illustrating that right over here in this upward channel, the minor cycle making higher highs and higher lows. And then in this yellow area, it still didn't break that bottom, but it had a little harder decline right in here because that was where two of them were nesting and coming down. Then that next cycle positive, you could see that should bring a new high. It did that. Higher high, but something has changed. You see this right over here, this breakdown, that suggests a major top. We were talking about 449 being a bad thing if it broke below there, and of course it accelerated sharply below that. Look at this minor cycle right in here. Because it broke below that low and is making that lower low, it suggests that a downtrend is established. So you see the uptrend established right in here and consistent, the downtrend now established. That says that somewhere here you're going to get a low. You might have made it, you might not have. I'm thinking that it's really coming in the next, maybe 6-8 trading sessions. Then you get another rally phase right there, which would give you a rally somewhere out over here. And then another sharp downward move here where both of these cycles come down. That's this yellow area right there, which is a period of risk. And then that tells you that in this period right over here, sometime in March out to early April, timing of the next cycle trough is early March to early April. That's where you can get a big decline. Now our projections right over here have been to the major 23.6%. That's around 410, 411 here on the SPY. Could break down right over here to the 15% correction level. And of course, it was a major panic. Here's where your 20% bear market is, around 375 right there. That's actually about 380, and that's the major 38.2 at about 375. This is a period of a ton of risk, and you're going to get days where the market looks really good. They might even be able to close S&Ps up 70 or 80 points in a single day. However, the probability is extremely high that it's going to be moving down. Look at this cycle action, positive, positive, positive. The breakdown right in here, as you see, the next rally getting not up, only up to resistance probably right out over here, and then a lower low as you see the downtrend has formed. This is really kind of clear, simple, but yet advanced stuff. You want to learn about this, please go to AskSlim.com to our workshop page. There's lots of information about taking our cycle analysis workshop, and I think you'll find it unbelievably valuable to you. So this is a good example of what's going on. The probabilities are high of lower prices coming for quite a while. Now let's take a look here at HYG. I'm going to move this in here as you look at high yields. These are high yield corporates right in here. And this is what I want to show you right in here. There are 3 occasions. Let me look right in here, bring this in so you can see. There are 3 occasions right in here of a saucer top in HYG that you can see. Beautiful saucer tops that formed, and each one of those was at a time when the conditions for the stock market got poor. So you can see the top right in here, and here's what the stock market did in 2015 and 2016. You can see that there. And once the top was made, you accelerated to the downside. Here, the saucer top here, 2016, 17, and 18. And then when they tried to raise interest rates and you had the temper tantrum right in here, the stock market really struggled during that period. Here you have the saucer top going on right now. Let's just look in a little closer right over here so that you can see that. There's your saucer top forming right now, and then that really points here to, let me get a little closer so you can see that message, to a low in June or July. Very likely to have another one of these periods where the stock market really struggles right in here, and that means that it's likely that the low that we're pointed to in March for the stock market won't be the low. That probably means that there are lower prices coming, at least out into July, and we thought that this could be a whole bear market year, and that certainly could be the case. So I wanted to show you HYG and these three saucer tops and how important those were to the overall conditions of the financial markets, and each one of those signaling problems for the stock market. So that is a look at the HYG. Here is a look at the stock market again, and we'll just talk about the correlation in here, and that is that this decline should come out into March. You should get a rally out over here somewhere, and looking at HYG, there's probably another big hit over here, and I wouldn't be surprised by July if we haven't seen bear market readings here in the stock market, and that doesn't necessarily have to be the bottom. Remember right now, and I showed this earlier in the show, that what's going on is that money is still flowing into stocks as we look at the mutual fund numbers. And if money is still flowing into stocks right now, and the market is having this huge move to the downside and this massive volatility, it shows you that the general retail public is still buying. They still think you buy the dip. And I think they're really wrong. And I don't think this is over with until they think that this is wrong. And there is a ton more pain coming in the stock market. That is our 1 to 3 month view, and even further out there with the special look at the high yields. I hope you found that absolutely fascinating.